Hi, my name is Sebastian Bielski. I'm CFO for Zeal Networks, and I will present our Q1 2024 results to you. We had a great and strong start into the new year. We saw exceptionally efficient and extensive new customer acquisition, driven by, number one, a very good marketing efficiency, and number two, a very supportive Jackpot environment in January. We strongly accelerated our growth of both billings and revenue. We saw great gross margin improvement, and we also submitted the request for the squeeze out of the minority shareholders to our subsidiary Lotto24 AG. As you all know, the Jackpot environment is especially important for us for new customer acquisition. In January, we saw 4 consecutive peak jackpots in Eurojackpot, which really helped us to acquire new customers. Overall, we saw a 35% increase in our revenue to 36.1 million. 2.2 million of this came from our new games business, which we launched in the second quarter of last year. In our core lottery business, we saw growth of 28.3% to almost 32 million in revenue. This growth was driven by both a 22% increase in billings as well as a significant expansion of our gross margin. When looking at the cost, our marketing expenses increased by 91% year-on-year, as we took advantage of the very good Jackpot environment and we acquired a almost record number of new customers. Especially important and good for us was that we also saw a 10% lower CPL compared to the last year. Our direct operating expenses grew by 47%, driven mainly by a higher share of PayPal, a higher cost for customer identification due to the large number of new customers that we acquired, as well as commissions for external games developers in our games business. The indirect operating expenses grew by 28%, mainly due to increased costs for external service providers, as well as for recruitment. Recruitment was also one of the most important drivers for a 22% higher personnel expenses, because we had about 11% increase in the number of our FTEs. We hired especially in our new businesses, such as games and social lotteries, and we also had higher costs for holiday accruals and some salary increases. Our EBITDA increased by 1%, and we're especially proud of that because of the very significant investment into future growth in the form of marketing expenses and also in the form of hiring new people. We had a big win in one of our social lotteries, the Traumhauslotterie, which actually reduced revenue by 0.8 million. If we would adjust for that to have a like-for-like comparison between this year and last year, we actually would have had an EBITDA of about 10.2 million, which would have been a 9% increase. When looking at our net profit after tax, you see an enormous jump to almost 21.1 million. One of the most important drivers, besides the small increase in EBITDA, is our positive tax result, which is due to the initial recognition of deferred tax assets due to about 50 million in tax loss carry forwards at the level of Zeal SE, which we recognized after we announced the squeeze out request for Lotto24. We will now look at a couple of our most important KPIs. As I already said, billings increased by 22%, and the most important factor for this growth is the increase of 21% of our monthly active users. So we had about 1.3 million monthly active users, which is a great and record result. And this was driven not just by an increase in the customer base, but also due to a high level of customer activity. This is the continuation of a trend that we also saw in previous quarters. I already talked a little bit about the great customer acquisition result that we had. We acquired about 320,000 new customers, an increase of 124% compared to the same quarter of last year. Especially great is that we did this while decreasing our cost per lead by 10%. In the last presentation, we announced 4 areas of strategic focus for 2024, and I will now give you an update on the progress that we saw in the first quarter. The first area of strategic focus was to improve Billings margin in our core lottery business in Germany. We announced that we target a Billings margin for lotteries of more than 15% in the second half. And we already saw a great improvement of the Billings margin to 13.3%. We will also continue to invest into our business in the form of customer acquisition, and we continued our brand marketing, which we started in the third quarter of last year. The third strategic focus area was the growth of our games business. We actually received approval for 64 new games, especially also instant win games. However, a higher level of growth at the moment is still hampered by very restrictive marketing restrictions due to our license. Lastly, we also announced the launch of our new charity lottery. We're still on track to do that in the second half of this year. We have the team in place, we have product and tech development well advanced, and we're working on regulatory setup and marketing. I already said that we saw a great improvement in the Billings margin. This was driven by two factors. Number one, a positive change in the product mix, which contributed 0.3 percentage points improvement. This was, for example, a higher share of lottery clubs. And then secondly, a 0.5% improvement due to the price optimization, which we already rolled out. When looking again at the customer acquisition result for the first quarter, this was the second best result we ever had. Only the second quarter of 2020 was better. Just as a reminder, because we now live in a post-COVID world, this was April 2020 when we had 5 peak jackpots in a row compared to 4 jackpots in a row in January, so slightly better. And this was also the very first COVID lockdown in Germany. So a lot of the stationary places where you can buy lotto offline were closed. And so almost receiving the same level of customer acquisition at the great CPL that we saw is a very, very good result. We continued our successful brand marketing, which led to a higher share of brand and organic traffic, which has great retention metrics and great conversion metrics. We had strong efficiency gains in social media and also some improvements in search engine marketing. Talking a little bit about our games business that we started in the second quarter of last year, we're still in the ramp-up phase at the moment. We have about 85 games live. We have received approvals for 64 new games, which will take us to about 120 games over the next few months. Especially important for us is that for the very first time, we have 8 games approved by the regulator, which are so-called instant win games. They have a lower return to player of 65 to 80% compared to our current average of 88%. And especially these games are really custom designed for our core lottery customers. And we hope to see a great uptick customer response to the launch of those games. Lastly, I would also like to reconfirm our guidance for this year. We still expect to receive 140–150 million in revenue, which would translate into 21 to 29% growth versus last year. And we still expect to reach between 38 and 42 million in EBITDA, which would mean between 16 and 28% growth. To wrap it up, we had a great and very strong start into the new year. Customer acquisition was super successful. We continue to invest into our brand, and our games business is well on track.